Good morning, and thank you for joining us today. My name is Katrina Perfield. I'm the director of the IMF's Institute for Capacity Development. And it's my pleasure to welcome all of you, those here in person and those joining us online, to our event today. We gather today to discuss a very important topic: corruption and illicit financial flows. And you have just seen in our video that these flows threaten economic stability and growth. The amounts involved are just staggering. As much as $6 trillion are laundered every single year, and IMF research shows that the annual cost of bribery amounts to $2 trillion. But let's look beyond these abstract numbers. These flows represent resources lost for investment and public services. And for our countries that face severe financial crimes and gaps in their frameworks to fight them, what we see is that the cost to businesses and consumers rise, investor confidence and social cohesion erodes, and the corresponding banking relationships of the country with the rest of the world also deteriorate. And all of that works together to undermine stability, growth, and importantly, livelihoods. But we want to move beyond the statistics. We want to ask how countries can and do fight these challenges. And we're very fortunate today to hear from Jamaica, who made significant reforms related to their anti-money laundering and the countering of financing of terrorism. Remember the acronym AML-CFT for short for that. And these reforms resulted in the removal of Jamaica from the grey list of the Financial Action Task Force. And that is a global watchdog body that is charged with preventing financial crimes. We also hear from Zambia. Zambia requested an IMF governance diagnostic to identify the important economic, governance, and corruption vulnerabilities within the country. And we also hear from Switzerland, whose strategic partnership as the fourth largest contributor to the IMF's capacity development work makes much of our work on anti-money laundering and AML-CFT issues possible. So let me turn to introduce our distinguished panelists. A warm welcome to Faisal Williams, the Minister of Finance and the Public Service of Jamaica, and Felix Nkulakusa, the Secretary to the Treasury of Zambia. We also have Christoph Koenig, the Deputy State Secretary at the State Secretariat for International Finance of Switzerland, and of course, my colleague Jan Liu, the IMF's General Counsel and the Director of the IMF's Legal Department, which leads our work on financial integrity and anti-corruption. But before we get going with our panel discussion today, I'm very happy to introduce the first Deputy Managing Director of the IMF, Dan Katz, who has kindly agreed to set the stage for our discussion today. Dan, the floor is yours. Thank you.
Well, thank you very much for the warm welcome, Katrina, and good morning, everyone. I'm pleased to welcome you to this discussion on the IMF's work on strengthening economic governance and financial integrity. Some might wonder why the fund is spending time on these issues rather than traditional focus areas of fiscal and monetary policy. But the truth is that corruption, money laundering, and other financial crimes are macro-critical. They drain public resources, distort markets, and erode confidence in the financial system, threatening economic growth and stability. I know this firsthand. I actually started my career working in AML-CFT at the US Treasury, so I received an early education on the subject. And while I've diversified my economic policy work in the years since, I've never lost sight of the importance of financial integrity. Our General Counsel, Yan Liu, has much greater expertise on these matters than I do at this point, so I'll leave it to her to provide more context in a moment, but let me just say this. Safeguarding economic and financial integrity is foundational to the IMF's broader mission of promoting economic growth and stability. And of course, capacity development is the central pillar of the IMF's work in this area. Our hands-on support helps countries translate policy priorities into concrete reforms and helps ensure sustained progress over time. It complements and reinforces the IMF's role in supporting its membership through its surveillance and lending activities. In this session, we'll discuss how we work with country authorities to strengthen their legal and institutional frameworks, improve transparency, build capacity for supervision and enforcement, and manage evolving risks to integrity. This work is especially critical for emerging markets and developing economies, low-income countries, and fragile and conflict-affected states, which often face the greatest capacity constraints. To that end, we are grateful to hear today directly from Minister Favoll Williams of Jamaica and Secretary Felix Nkulusksa of Zambia on their work in this area. Thank you very much for joining us today. We are also grateful for the continued support and collaboration of our partners who provide both critical strategic guidance and much of the financing needed for our capacity development activities. Switzerland is one of our longest-standing capacity development partners, particularly on illicit finance and governance work. And I'm pleased that my good friend, Christoph Koenig, is here today to provide us with his perspective as a Deputy State Secretary. And with that, I'll hand back to Katrina to start the discussion. Thank you very much.
Thank you very much, Dan, for framing the discussion, and I think for highlighting for all of us at a time of heightened shocks, tightened financial conditions, and constrained development resources, why tackling these illicit flows and corruption is an absolute imperative. Now, let me turn to our panelists. And Jan, I'd like to start with you. Clearly, the data has showed us that corruption and illicit flows impose significant economic costs. But help our audience here today understand the channels through which they operate and erode the institutional foundations that our markets, our businesses, and our citizens depend on.
Thank you, Kat. We often describe corruption and illicit financial flows as governance problems, and they are. They distort policy, weaken the rule of law, and erode trust in public institutions. But when corruption and illicit flows are significant, they are more than governance failures. They are macroeconomic risks because they undermine stability and also hold off the growth. But this is not new. As early as 1996, the IMF then managing director, Kam Dussu, warned that money laundering alone could reach 2 to 5% of global GDP. And more recently, IMF research finds that corruption-related shocks are associated with 3% drop in GDP over a 2-year period. As you said, these are not abstract numbers. It is about weaker governments, distorted markets, and real losses for citizens. So how does this damage economics? So I will flag 4 channels. First, a fiscal hit. Corruption and tax evasion drain public resources through revenue leakage and wasteful spending, really crowding out education, health, and infrastructure. I think over time, business confidence drops, investment weakens, and growth slows. Second, financial instability. When illicit proceeds really move through the financial sector at scale, they can fuel volatility, and they can also destabilize the financial system. And weak AML-CFT controls can expose banks to sanctions, strain correspondent banking, and also raise liquidity and solvency risks. Third, I would say disrupted cross-border payments. Payment channels vulnerable to crimes such as fraud are often seen as unreliable. So jurisdictions with serious integrity deficiencies are perceived as high risk. So this drives up the cost and disrupts remittances and trade finance. I think they tend to target low-income countries the hardest. Finally, institutional erosion. When corruption and illicit financial flows really impair core state functions, they undermine the foundations of economic performance, whether it's investment, human capital, or productivity. In most serious cases, the pervasive mistrust in governments can spill into social unrest and conflicts with devastating economic and social consequences. So bottom line is clear. Safeguarding economic integrity through combating corruption and illicit financial flows is not optional.
Thank you, Jan. The fiscal hit is clear, the hit to financial stability, the hit to investment, the hit to trust in societies. So it's far-reaching. But let us turn to our guests for some examples of how they're addressing this on the ground. Minister Williams, I'll turn to you now. Now, Jamaica's removal from the FATF grey list in June 2024 was a major milestone. It's one that required sustained progress throughout the pandemic on a very comprehensive action plan. Now, help us understand what was at stake for Jamaica in practical terms. What did grey listing mean in practice? And what was the tipping point that made tackling these issues a national priority? And how did the IMF's technical assistant help you make some progress?
Okay. Thank you very much, and good morning, everyone. As was said, we did come off of the grey list in mid-2024, and that was an achievement. But I want to take you behind the scenes a little bit to when we got the news that Jamaica was put on the grey list. Then our finance minister then walked into the cabinet, and when he made that announcement, you can imagine the silence that was in the cabinet. But it was the resolve among all of us that we had to tackle this and get off the grey list in as short a time as possible. As you can imagine, quite a bit of legislative work had to be done, and we put our shoulders to the wheels and got that done. We're proud of the progress we have made in implementing our action plan, and of course, we deeply appreciate the support from the FATF, the Caribbean Financial Action Task Force, the EU Global Facility on AML, CFT, and importantly, the sustained and high-quality technical assistance provided by the International Monetary Fund. Through this collective effort, Jamaica has not only strengthened its AML, CFT, CPF framework, but has also enhanced its institutional resilience, deepened interagency coordination, and improved the effectiveness of our risk-based approach. And these reforms have reinforced Jamaica's credibility and standing as a responsible and committed member of the global financial community. And interestingly, where we are in 2026, we have just embarked on our fifth round mutual evaluation. Our on-site will be in October of this year. I can tell you, when you look at the list of immediate outcomes, there are only 3 of them that we have to tackle in this round, yes, including the virtual asset service provider. We have to look at, as well as our not-for-profit entities. So we are pleased with where we are in terms of the efforts and our standing. We understand the costs of not being there, the cost of being on the grey list and the blacklist as well. It comes by way of our correspondent banking partnership and the increased cost that entails. It also limits business that we would otherwise have been able to do. And so we are committed to ensuring that we maintain the highest level possible, because we know the downside of this, having lived through it, and we would encourage other countries, if they haven't taken this seriously just yet, to begin that process. Because being on the grey list or the black list has real financial consequences and business consequences as well. Thank you.
Minister Williams, taking us inside the room when you got that news, the silence and the shock just underscores the seriousness of what grey listing means. But I think you've also shown us what political will looks like. The comprehensive action plan was over 13 actions that you had to address in a relatively short period of time. But let us turn now to Zambia. And Secretary Nkulukusa, at Zambia's own request, I understand, the IMF staff, working in close collaboration with your government and non-governmental stakeholders, conducted a very comprehensive governance diagnostic back in 2022. And that diagnostic identified significant weaknesses and reforms required in anti-corruption frameworks, including AML and CFT, fiscal governance, rule of law, central bank governance, and financial sector oversight. And I read the diagnostics myself, and what struck me was how these governance and corruption vulnerabilities really contributed to the macroeconomic instability that Zambia was experiencing, as well as its unsustainable debt burden at the time. What drove your government to request this diagnostic, and how did its findings help Zambia shape its own reform agenda?
Thank you very much for that question. On assuming office in 2021, the UPND government developed the 8th National Development Plan, a strategic framework for socio-economic development, infrastructure, and macroeconomic stability. In that plan, we had 4 strategic areas. The first was the economic transformation and job creation. How do we transform the economy and create jobs and therefore start to grow? The second one was human capital development in education, in health, to ensure that we have productivity and we have human capital that responds to the development challenges. The third one was environmental sustainability, looking at sustainable management of our natural resources, climate resilience, and green growth initiatives. And the fourth one was good governance environment, strengthening institutions, accountability, transparency, and citizen participation. At that time that we were developing the plan, we saw that the corruption perception index for Zambia was deteriorating from about 38 in 2011 to about 33 in 2021. And it is on this basis that in order for us to strengthen these institutions, to strengthen accountability and transparency, that we needed some support in the diagnostic review so that we can then have an informed position on the reforms that we undertake. And in November 2021, we then requested for this diagnostic assessment of the Zambia's governance and corruption. And in 2022, this assessment was given to us, and based on this assessment, we now are undertaking reforms. We have undertaken a lot of reforms, and we are still implementing. And some of the reforms that we have undertaken, for instance, was for the introduction of the anti-corruption policy in 2023. And this policy is basically helping us how we can be able to fight corruption. We then went and said, what are these issues that are bringing about corruption? And the recommendation in this assessment, one was that we should have amendment to the Companies Act so that we can be able to provide for beneficial ownership and transparency in the doing of business. And we have done that as part of the reform that we undertook. The second was that the information should be available, and therefore we needed to have an Access to Information Act. And we then introduced the Access to Information Act. The third one was that we saw that this corruption, there is a lot of illicit financial flows. And the question was, how do we make sure that we address these things? And we then came up with an electronic balance of payment and import tracking mechanism so that we have got real-time information on what is going out and what is coming in. But we also saw that there was a lot of outflow illicit financial flows. And we then, from the recommendation of this report, enacted a law under the Income Tax Act that basically provides for advance income tax for any outbound transaction that is $2,000 or above, unless the person who is undertaking that transaction has got a tax clearance certificate so that they can be able to comply. We also then, from the recommendation, realized that people that were involved in corruption, it took time for us to prosecute them, and therefore it lost meaning in the process and it didn't act as a deterrent. And one of the recommendations was to establish an economic crimes, economic and financial crimes court. And this court has been established, and there's a commitment that within 5 months of someone being taken to court, there should be an adjudication so that it acts both as a deterrent, but also it helps us to make sure that we recover the money that was gotten through corruption. We now are looking at the Anti-Corruption Act itself. How do we amend the Anti-Corruption Act to ensure that there is transparency, to ensure that there is accountability, and to ensure that there is commitment in the fight of corruption in the areas that we are identifying as we go ahead? So this is how we have responded to this. Thank you.
Thank you, Secretary Nkulukusa. When you step back, you hear, first of all, how this was a national priority, a core pillar of your National Development Plan. And I'm hearing how you took the diagnostic and mapped out a course of action that moved beyond the laws into very concrete steps. And I very much like the time-bound 5 months, come back, show progress, so that you really move beyond the paper and into effective delivery and change. And I'm sure it took a lot of effort to do that. So thank you for sharing that. Christoph. Let's turn now to the partnership dimension that is making much of this work possible. And for those of you in the audience who may not know, Switzerland is a long-standing and prominent contributor to the AML-CFC Traumatic Trust Fund that helps countries like Jamaica, as you heard, but also countries as far away as Jordan and Uganda successfully exit the FATF grey list. And Christoph, we're keen to hear from you why this matters, why it's important to strengthen governance and financial integrity in low-income countries or fragile countries for a country like Switzerland.
No, thank you very much. Thanks also for having us. And indeed, safeguarding economic integrity is one of the key cornerstones of our development agency and policies that we have. And what we see is a lack of integrity actually is also one of the main detriments to sustainable development. What we see is that a lack of integrity can increase transaction costs considerably. We have heard it, it distorts markets, it leads to misallocation. Ultimately, it's just not good for development and growth. So fostering credible and functioning institutions is actually at the heart of our engagement. However, it's not only for these reasons, but also for global trade policy reasons. It is important for Swiss actors and other global active players and companies to know your customer. So, a proper due diligence and compliance framework is important for global business to actually provide correspondent banking relationships, but also trade relationships. As such, it is also one of the cornerstones and fundamentals where trade can then go on, and that's why also it is important that the kind of AML-CFT frameworks are built across the jurisdictions in similar ways with the necessary expertise. And third, and that's also why we really cherish also the AML-CFT Trust Fund of the IMF, it provides quite a unique expertise with actionable, concrete elements where concrete steps can be taken, which go beyond just pure compliance advisory. For us, it is a strategic investment that we are undertaking through the IMF to foster credible institutions over the long run. Thank you.
Christoph, I think many of us in the audience are very familiar with know your customer. And I think that's essentially, we need to know who's on the other end of the transaction, because trust is essential to any financial flow, to any trade, and without it, we hear the cost clearly. Thank you for supporting us in this work, for supporting our member countries. Jan, turning back to you, and looking at the findings of the various governance diagnostics and the work of the legal department under the AML-CFT thematic fund, and I understand over 57 countries. What are the key challenges that countries face in addressing economic and financial integrity risks? Are there any common patterns emerging to those challenges now that you have kind of a broader overview? And how are you helping them overcome these challenges in a sustained, impactful way?
Great question. I see two challenges come up again and again. I think first is capacity. In high-risk settings, institutions that should prevent and fight corruption and financial crimes are often under-resourced and overstretched. I think it's so hard for country authorities to set priorities, sequence reforms, and most importantly, sustain implementation. I think second is effectiveness. Passing laws is essential, but it's not enough. Too often, frameworks look strong on paper, but they don't deliver concrete outcomes, investigations, confiscations, or sanctions. I think the data is really sobering. Close to 40% of countries assessed against the AML-CFT standards are rated as having low effectiveness, whether in implementing preventive measures to address money laundering and terrorism financing, or in applying risk-based supervision. We see the same in anti-corruption. The question is not just, do you have rules? I think the question should be, do they work? This really requires a credible conflict of interest regimes, meaningful asset declaration, and also access to accurate, up-to-date information on beneficial ownership. And I think this is inherently cross-border. Illicit proceeds generated in one jurisdiction are routinely laundered in another, creating spillovers. So these are global problems, and they require global solutions. On your question, how we support countries, I want to highlight legal department's work, delivered really in close collaboration with other IMF departments, including yours. Our approach has 3 pillars. I think first, sustained long-term engagements. As we all know, institution building takes time. So we often provide multi-year engagement to really support countries to sequence reforms, embed new frameworks, and also build durable institutions, all anchored in strong country ownership. I think this includes governance diagnostics, we just talked about, and AML CFT, national risk assessments, stronger supervision and financial intelligence, financial flows analysis, and also work on emerging risks, particularly in digital finance. So on average, every year, we deliver about 40 AML CFT TA projects, and since 2018, we have completed 27 governance diagnostics. Second, I would say training and peer learning. We reinforce country-level work through regional training and peer learning networks. We have 7 regional long-term experts or advisors based across all regions, supporting country authorities. We also offer online course on risk-based supervision and publish practical guidelines, such as handbooks on beneficial ownership and counterterrorism financing. Third, integration. We don't do capacity development work in a silo. This fits directly into IMF surveillance, program design, and where relevant, conditionality, and all to make sure reforms stick. So we stay focused on corruption and integrity risks that are macro-critical, those that affect financial stability and economic growth. And we also collaborate very closely with our partners to avoid duplication. So I think ultimately our goal is to deliver reforms that last. Thank you.
Jan, from what you say, capacity development is key to making the reform stick. It helps to be that bridge moving from compliance into effective change. It gives countries, and I think we heard from Zambia here, the concrete measures that bolster prevention, enforcement, and transparency. But I'm also hearing the on-the-ground expertise. Those 7 experts, the training, the peer learning events is very, very critical to sustaining the effort and making progress over time. Now, turning back to you, Minister Williams, you mentioned in your remarks that Jamaica is now chairing the Caribbean Financial Action Task Force, and this October will be undertaking a new round of mutual evaluations. And building on your experience in Jamaica, what advice would you give here to other countries that are either currently grey listed or at risk of being listed, in particular on how to sustain that political will and to overcome the hurdles, because we know these reforms take time, persistence, and effort to bear fruit?
Okay, great. Thank you. Well, my advice to other countries is this. Do not approach the grey list, getting off of it, as a temporary compliance exercise. The real task is to make the strategic and policy decisions that ensure the reforms, the discipline and coordination that delivered you out of this list, that those are firmly embedded in your jurisdiction's political and institutional architecture in a way that supports long-term sustainability. In other words, the objective is not only to get off the grey list, but to build a system that keeps you off the grey list. So remember that. So one of the greatest risks that we find after delisting is to treat success as the end of the journey. It is not. Countries must deliberately transition from exit mode to institutionalized AML-CFT governance. This means the coordination mechanisms, the political momentum, the accountability structures that drove implementation, those should not be dismantled. They should be preserved, they should be strengthened and anchored in permanent national arrangements. And this is where strategic and policy choices become critical. National risk assessment informed priorities should be embedded into national strategies, legislation where necessary, institutional mandates, budgets, and performance management frameworks. And we heard from one of the panelists in terms of capacity issues, training, effectiveness. Because yes, while it's good to show that we have the legislation, the more important question or observation will be the effectiveness of what your laws say that they can do. Have you prosecuted any entity for violation of AML-CFT? Have you done the work? Can you demonstrate? Do you have the systems in place to report? Do you have the systems in place to alert you, in the event, your financial institutions are going off a little off course? Do all those systems work to give you that alert? It is my opinion that central coordinating bodies must remain empowered, properly resourced, and able to hold agencies accountable for delivery. Political commitment must also continue beyond the grey list period, because sustaining reform is often harder than initiating it. That sustained commitment is essential, not only to preserve the gains already made, but also to support credible performance in your next mutual evaluation, and thereby reduce the risk of re-entry into enhanced monitoring. And we are well aware of that as a country. As I said earlier on, we have embarked on our 5th round mutual evaluation. Our on-site visit is coming up later this year in October of 2026. We know what all of that entails, and we are working hard to ensure that we come out of this with high marks. We've placed strong emphasis in Jamaica on coordination, accountability, and execution through our National Anti-Money Laundering Committee, or NAMLAC, which serves as the central national coordinating body, and this is housed at the Bank of Jamaica. It brings together all relevant ministries, registries, competent authorities. We have over 26 members. It is supported by a dedicated prime contact secretariat, which became the operational hub of the National AML-CFT program. This structure helped ensure that our response was not fragmented, but reflected a whole of country understanding of priorities, of risks, and the action plans, the deliverables that we have for that action plan. Let me add that the technical assistance from the IMF played an important role. Its value was greatest because it was absorbed into the broader national framework. So, for example, IMF technical assistance to the Bank of Jamaica was channeled through the National Anti-Money Laundering Committee, with the bank acting in its capacity as competent authority for deposit-taking institutions, money service businesses, credit unions, microcredit service providers. As a result, the insights and methodologies received were not applied in isolation. They became part of Jamaica's wider national reform effort. So we want to encourage countries to make it into a national effort. It's not just the purview of your central bank. It's not just for your ministries of finance to be responsible for that, but it has to be a national effort. All of your country, in our case, all of Jamaica, understands the value of having a financial system that's strengthened, that is not a weak link for money laundering. We understand that we have to plug into the wider world, and most of all, we truly understand the costs if we don't, if we're not moving along in terms of the pathway that we should go. So the broader lesson is that technical assistance is most effective when it supports national ownership, strengthens domestic institutions, and help countries move from fragmented reform efforts to an embedded, sustainable system of governance. At its core, that is what long-term success requires: a whole-of-country risk-based framework grounded in strong political support, durable institutions, and coordinated execution. We believe those are the core principles for our success in Jamaica. So regardless of who leads whatever institutions, when those persons demit office because they may retire or go on to other things, those institutions will still exist, carrying out the work of ensuring that we maintain our good standing. Thank you.
Minister Williams, if there's one thing I take away from what you said, getting off the list, whether it's the grey list or the black list of FATF, is not a box-ticking exercise. If anything, it's something that's woven into the fabric of the whole nation.
Yes.
Its institutions, its policy makers. It requires, as you said, whole-of-country effort. Secretary Nkulakusa, the governance diagnostic clearly informed your government's anti-government reform agenda. And I know many of these reforms were fully built into the IMF-supported program through conditionality. From today's vantage point, we can see some reforms, like those to the Anti-Corruption Act, have taken time. Others, like the state-owned enterprise Health Check 2, has made measurable progress. Stepping back, what were your biggest challenges in maintaining the reform momentum, and how did you consider prioritization and sequencing in that? Thank you.
So thank you very much. I think the biggest challenge to maintaining the momentum, first and foremost, is the issue, and I think my colleague raised it, the issue of the capacity. And we realize that we don't have the capacity in the institution, the investigating institutions and the competent authorities that would be able to help us and realize the benefit of the reform that we're doing. And as my colleague had put it, that having the reform itself is not an end to it, but to make sure that we implement and people start seeing the benefit of the implementation of the reform. Another challenge that we saw is the interagency collaboration. And we see this challenge both at the domestic and across the border collaboration. Because when we are talking about corruption, most of the practices are happening across the border, or the corrupt assets are taken across the border. How do we make sure that we follow through the assets that are happening across the border and we recover those assets? How do we make sure that we have cross-border cooperation on asset recovery and mutual legal assistance? And how do we enhance and make sure that we achieve that? We also have seen in the Zambian case that obviously the government that came with this reform was a new government, and there was a government that was there before. And we saw that almost everyone that was implicated in corruption all of a sudden became politicians. And then obviously the cry was they are being persecuted because they are opposing the government and they are not supposed. And how do we make sure that we navigate the narrative to make sure that the corruption fight gains traction and is supported by the rest of the Zambian people? The main thing that we saw, and obviously the delay in some of the laws, is that in the Zambian case, we have got the Constitution of Zambia, that is the supreme, and then we have got the subsidiary laws that come down. And obviously the question is, on the subsidiary, we can be able to amend those pieces of legislation by going to the National Assembly and proposing the amendment through the established processes where we do the consultation and we go there. For the amendment to the Constitution is that we need to have a referendum in order to amend the Constitution. And some of the proposed areas where we are supposed to take the amendment are areas where we see there's some conflict between the provision of the Constitution and the proposed amendment that we need to undertake. And the question is, how do we ensure that we achieve the objective by not violating the provision of the Constitution and by going around the legislative process that gives us that establishment. And I think this is one of the reasons why we have had some delays, especially in the amendment of the Anti-Corruption Commission Act, while the other acts we have taken place. And we are coming up with some proposals, obviously discussing with the advisors, discussing with the legal team on how we can achieve that accordingly. Thank you.
Thank you, Secretary. I think we're hearing some very common themes from the ministers. Capacity, coordination, and complexity. These reforms take time. And I'm looking closely at time, and I'll take one last question to the panel, but I invite anyone from the audience who wishes to ask a question to begin setting up at the mic in the center. Now, Christopher, final question to turn this forward before we turn to our audience. Very simple, looking into the future, never easy. Do you think these challenges will grow or diminish?
They will certainly not diminish, they will just change in nature. What we see certainly, we have heard it, that capacity constraints and also the necessity of having a holistic approach is something which has risen in awareness across the globe. And that's quite promising. And the complexity is growing, in particular when it comes to digitization. We see that in particular crypto assets do provide a new avenue of how illicit flows can take place. It's not new, it's just a new avenue how it can happen. If you compare how illicit flows have taken place in the narcotics trade in the 19th century, it's also another way of how actually this has happened. But also we have with the digitization new elements of detection, how we can actually use the digitized instruments in detect frauds and illicit flows. And lastly, also, we have new issues like privacy and privacy issues, which are quite challenging to deal with. Thank you.
I think you highlight both the challenge to keep ahead with technology, but also how it enables us. So let us turn now to our audience to hear some questions. I'm going to ask each of you to identify yourself by name and affiliation, and to be very brief, just one issue or question.
I promise.
Thank you.
My name is Hisham Jabi. I'm from Palestine, CEO of Jabi Consulting. My question is about the role of youth in confronting corruption. I come from the Middle East, where social contract is an abstract for youth. Public trust is deficit in public trust. And the demographic of 65 something below the age of 30. So I would love to hear from you about how do you engage young people, give them agency in confronting youth. The second, any model of utilizing technology and AI in detecting fraud and fostering transparency. Thank you.
Great question. Let's take a second.
Hello, my name is Jerome Beaumont. I'm the Executive Secretary of the Eichmann Group of Financial Intelligence Unit, gathering MROS, Switzerland, or FinCEN, US, FID, Jamaica. Well, my question is, as and my question is to Minister Williams. As financial systems evolve quite quickly through fintech, through faster cross-border payments, through new financial products, I would like to know what are some of the integrity risks that Jamaica is looking into, and how do you intend to address them without undermining innovation? Thank you.
And we'll take a third question, and then we'll turn back to the panel.
Thank you. My name is Anna Vlasovanjai. I work here at the IMF on capacity development financing and resource management. So my question is to our Swiss panelist. Mr. Koenig, decreasing ODA is also affecting technical assistance to countries. How do you determine which projects you support? Thank you.
Thank you. So maybe what we can do is turn to Minister Williams about the technology aspect, because I think it came up twice in the questions, if there's tools that we can leverage there. To Christoph Koenig on how you prioritize in a constrained environment. And Jan, if you'd like to come in on engaging youth. Okay. Thank you.
All right, so I'll start with the question that has to do how do we manage the new risk. That's my interpretation of the question. And I would say that our Bank of Jamaica, that oversees the deposit-taking institutions, in particular in Jamaica, they have a methodology. They utilize a sandbox methodology for these new technologies. Of course, you know what that is. It's a simulated environment in which institutions who wish to launch these new age products would come into the Bank of Jamaica's environment virtually and demonstrate the capability of these products and allow them to be tested against our system. When I talk to those who want and are eager to use these new virtual assets and these new technologies, they're anxious to get going, but obviously we have a Bank of Jamaica with a great responsibility for our sector, and so they move a little bit more deliberately at this because they know that our system is, quite fragile, and so we have to move with surety in it. But I think we'll get to a place where we can begin to see some of these new product ideas in the marketplace and have the assurance that they have been tested and that the risk of them remains quite low. So that's the question. And I think there was another one with regards to the youth, and the way I interpret that as well was how do you engage the young people? And my solution would be to meet them where they live, figuratively speaking. They live in the virtual world. You have to learn to speak their language. If you want to bring AML CFT concepts home to them, you have to begin to speak the way they speak, understand the way they understand. Additionally, you can use some of the traditional methods in terms of bringing them in to the institutions, giving them a tour, talk with them, help them to understand and meld, the traditional institutions that exist versus their virtual world that they understand. So that is how I would try to reach our young people these days to help them with this very complex topic of AML CFT.
Christoph, turning to you.
Very brief. What I think the competing challenges that we face when looking how to prioritize ODA, certainly what we need to do is having a clear look of where can we have the best multiplier effect. And what we see is the framework conditions that lead to growth and business opportunities certainly are still very much prioritized. What is important in that case is that institutions like the IMF do provide the necessary material to show where priorities should be given. A second point, maybe it's not just competing ODA funds, but it's competing funds or competing institutions internationally for the same funds. So it is very important actually that international standard setters do coordinate closely also with the IMF, also when it comes to what kind of funds are being provided by sponsors like Switzerland. So we only can pay once. It is very difficult to pay twice. Thank you very much.
I'm going to just take one final question from the audience before turning it to the panel for a wrap-up. Your question.
Thank you so much. My name is Abhinav Dutt. I'm a master's student in international development here at Georgetown. My question is about national context. So today we've seen really strong, successful examples of countries having success in safeguarding economic integrity and confronting corruption because they share the same vision that the IMF does. But that isn't always the case. There are countries that have different priorities, might not share the same vision, local institutions that might not be as cooperative. So my question is, does the IMF still have a role to play in those contexts? And if yes, what would that be? Thank you.
Great question. Jan, very briefly on that, and then we'll turn to wrap up.
Yeah, very, very briefly. So when we provide technical assistance, we absolutely have to take into account the specifics of a country. You know, the capacity, the institutions. As I mentioned before, I think as Minister Williams mentioned, country ownership is paramount. So I think it really requires all stakeholders to really work together, regardless the situation in the field. But I think collaboration, the ownership, the commitment are the most important factors.
Thank you, Jan. One last question to our panelists. Quick fire, 30 seconds. One issue, if tackled now, to strengthen financial and economic integrity that would make a difference, what would it be? Christoph.
What I would do is further support or train the trainers.
Train the trainers.
Just actually really supporting financial intermediaries, private actors, to increase their efforts actually to train also their counterparts in developing countries.
Thank you. Minister
And
Williams.
what I hear from, across the country, my country, is that the globalization of the travel rule and wire transfer requirements, if those were put into, if those were addressed, they could immediately provide some strengthening of economic and financial integrity.
Good on the checklist. Secretary Nkulukusa.
Capacity enhancement and interagency collaboration.
Let's work together. Jan, final word.
For me, effectiveness. I think we heard today, real impact takes sustained commitment from country authorities, from stakeholders, from us at the IMF. We're really deeply grateful to our donors for their support, including Christoph and your authorities. I think if we get this right, the payoff is clear. Stronger institutions, sustainable growth, and a more resilient global economy.
Well, with that, I want to thank each of our panelists and you in the audience for joining us today. It really drove home how important addressing corruption and illicit flows are for our member countries, why it matters for growth, and capacity development makes a real difference on the ground. So for those who want to learn more about how we work with countries through capacity development, I point you to our experience at the back. Please pop in and ask questions under the sign Learn. Let's put our hands together to thank our panelists deeply. Thank you. and wishing you a productive meetings. Thank you.